Let's talk about global shipping. Amidst the US-China trade tensions, and of course, global trade tensions, shipping as a sector is in focus. We have Mr. G Shivakumar, Executive Director and Chief Financial Officer at G Shipping, who's with us. Mr. Shivakumar, good morning. Thank you for joining us. So let me just get this data to you, right? This is data on global TEU containers. I know you're not into containers, but just to give you a sense of the what's happening globally. This is as of the 14th of April, week ended 14th of April. US, this is, week on week. US imports are down 12%. China to US movement is down 22%. On a year-on-year basis, the numbers China to US is down 45%. So this obviously is a sharp slowdown that we are seeing as far as global trade is concerned. As I began by saying, containers specifically don't affect you, but the indirect second order, third order effect on tanker market, oil prices have fallen sharply. Tell us what you're seeing.
Morning, Prashant. Thanks for having me. Yes, we're not in the container business, but I think it's fairly logical, the outcome that we're seeing, which is that container trade has sort of, especially the China to US trade, has fallen off a cliff. Yes, that doesn't bode well for the container business if things continue the way they are, which is with very high tariffs on Chinese goods. But coming to, as you put it, the second and third order effects on the rest of world trade. One is, of course, if you have more inflation picking up or in the US, which leads to potentially a recession in the US, or at least slower growth, and which again leads to poorer growth worldwide. You would have a slower commodity demand as well, which would affect us. Coming specifically to US and China, there are only two commodities or two sets of commodities really which affect the commodity business in any significant way. One is propane. About 14% of global LPG trade goes US to China. And this is a trade route which has developed in the last year or so, in the last decade or so, as US shale output went up a lot. And the other is ethane, which again is a new developing trade. We are not in that at all. And dry bulk, which is grain from US to China, is a small part of global dry bulk trade, probably 1% or so of global dry bulk trade, so not as much of an impact. But yes, the signs for the global economy are not great if we have this kind of uncertainty going.
I think last night, I think propane or ethane, China has kind of cut tariffs, right? They've allowed tariff-free imports to come in.
That's right, ethane.
Ethane, yeah. But you're not in that segment, right? Could you give us a sense? Is there any way to estimate, what are rates like, tanker rates like right now?
So no impact at all on tanker freight rates so far. No impact on either crude tankers, product tankers, or bulk carriers. We had a sharp drop in LPG rates. Again, this is that propane trade going from US to China. So that's a VLGC trade, that's very large gas carriers. Those spot rates dropped off very dramatically in just the week or 10 days following the Liberation Day announcements. They've bounced a bit now because, again, if the product is being, the commodity is being produced, it will tend to get transported somewhere and you will find the clearing price for it to go to find a buyer. So that trade has bounced after that. It's bounced substantially from the lows that we saw immediately after Liberation Day.
This in the past we've spoken to you. The other thing which is going on is Russia, Ukraine, and you've maintained that shipping rates will fall sharply as and when that kind of some sort of a ceasefire is reached. And Russia, Ukraine is much more material for crude product, etc. Again, there's been some talk for a while, but some talk that something may come in terms of a ceasefire. You want to provide us with an updated assessment?
Yeah, that's geopolitics, and we're not really experts there. But yes, if there is a rapprochement between Russia and the US and NATO on Ukraine, we think that it'll bring tanker rates down because that was a significant ton-mile impact. However, I don't think it's going to normalize so quickly, even if there is peace there and there is some kind of ceasefire or a peace agreement which is brokered. So it'll take time to feed through, but yes, you could have rates coming off if that full impact reverses.
Sorry, just one more broader question with regards to India specifically, Mr. Shivakumar. I mean, this, and we will hopefully over a period of time benefit with more trade as there is a shift away from China. I mean, does your business get impacted at all in any way?
No, not really. The one thing that I should mention on Russia, because we mentioned Russia, that the US is tightening sanctions on a lot of ships, whether involved in the Russian trade or the Iranian trade, both of which are sanctioned, subject to sanctions. And that's affecting the supply of ships. Now, these are tankers that are doing the trade. And so those ships are getting taken out of the system and therefore making the system less efficient. So it's not just on the supply side or where you need ships, which is from the ton-mile impact of the Russia-Ukraine war. The US is also putting pressure on the ships which are doing that trade, so you could have those ships getting taken out of the market as well.
Mr. Shivakumar, please.
Sorry, we've also seen Indian imports went down a bit from Russia immediately following those sanctions which happened in January 2025. But now they've bounced again because we are down below the EU price cap of $60 per barrel for crude oil.
Interesting. We are hearing a lot about, a lot of focus in the US, for example, with regards to shipbuilding, focus on shipbuilding, right? I was looking at data last 5 years. Actually, US has hardly made any ships. I mean, of course, it's a cost thing. Japan, Korea, South Korea, and China. Of course, China is the biggest. As an operator, because this is a long drawn story, but are you expecting a lot more supply? What's your sense?
Shipbuilding capacity in the US is very low. And as you mentioned, they are very expensive. So they don't compare in price with the ships produced from the three main producers of ships now, which is Japan, Korea, and China. So it's tough for them to compete, and it's not a huge amount of supply really. India itself is looking to boost shipbuilding, and we are probably closer on the cost curve to the big three than the US is. We are much closer if we can get those capabilities done.
And no decision on buying. Are you closer to buying anything, doing anything?
No, not really. Prices are down a little bit, but not really. We are still waiting to get those attractive prices.
Okay. How as you look at FY26, how does it look compared to the last year?
So I'm not going to give
earnings wise, yes.
Yeah, so markets are a little lower now than they were a year ago for tankers. So that's all I'll say. We have a board meeting coming up in about a week's time.
Sure.
And we'll discuss those after that.
Yeah.
But again, uncertainty, there is so much uncertainty around everything. As we started with what's going to happen to the world economy, that it's getting even tougher to forecast these days.
I understand, and we'll speak once you sort of come out with those numbers, Mr. Shivakumar. We'll talk numbers then. Thank you very much, but interesting perspective on the space. That's the G Shipping Management there.